Welcome back. This is Chili Davis, and I'm back to do another video. I want to thank you for stopping by the channel. This channel where we talk about stocks, we also talk about credit, and we also talk about other wealth strategies, how to build cash flows long term. The top stock this morning is CLOV, or Clover Health, is up 15.5%. Next ticker symbol we have is Sonos Audio. So SONO is the ticker. They're up 9%. They beat earnings or revenue expectations. Ticker symbol PLTR or Palantir Technologies is up as well, 8%. And they had good earnings as well. So if you see Sonos in pre-market is up 11%. And then we can talk about the article here. This is Investors Business Daily, says music speaker maker Sonos blast loud quarterly beat. And then Palantir will report in about an hour. Okay, so Palantir just started their earnings. It's 8 o'clock Eastern Standard Time, and apparently it must be going well. It is up 9.35% in the pre-market. And says Palantir's revenue jumped 49% in the second quarter. So that's some good news there. See what else. SOFI is up this morning 1% as well. I bought some more SOFI yesterday. It does have a record high of about $22 per share. So I'm just waiting. I've been in SOFI and IPO since last September. So I got into SOFI before it converted from the SPAC IPO, and I got it at $10 per share. So pretty much I'm up overall, but I'm continuing to buy it. I really believe SOFI is basically a new fintech bank. I think it can get back up to as far as $30, $35 per share. So I'm long-term for SOFI. I'll just say that. And the other ticker symbol up this morning is Wendy's. Wendy's is doing good things. They have a breakfast menu, and they are getting into the ghost kitchen market. So that's sort of like where they do pop-up. So let's take a look. Wendy's News, WEN. Says Wendy's surpasses Q2 earnings revenue estimate. It says here, Business Insider, Five Guys, Wendy's, and others break down decision to open ghost kitchens. So again, that could be a new service or product for Wendy's, opening up what they call ghost kitchens during the pandemic. And this trend could continue. So keep your eye on the Wendy's stock. I got in about $20 per share. It is now trading at about $22 per share. Not a whole lot, but interesting. It could be interesting. I believe Wendy's is undervalued compared to a lot of other food franchise stocks. What else do we have? So we talked about SoFi, we talked about Wendy's, and not a whole lot there. Let's see what else is going on. Rainy Therapeutics is up 51%. Lightning in a box up 40%. And Doximity is up 33%. And Joby Aviation, this is the new aviation kind of flight within the city. It's relatively cheap. I probably wouldn't get involved in this till it gets to be $20 per share, but it's a new little way of I guess flying around the city. So it's a pretty unique product. It's for like congested cities like New York City, etc. Facebook may sell Gimpy on Britain's competition concerns. Okay. So Facebook take a little bit hit, and Bank of America continues to outperform the market. Bank of America did just raise their dividend, so that could be one of the reasons. But think of dividend stocks as money. It's almost like $40 a share is a dollar or a certain amount. And then what people do is they buy a lot of it and they get this 2% dividend on it. So even if Bank of America never goes any higher, let's say it trades at $40 per share for the next 10 years, they know every year they're going to get a 2% dividend. So for some people, that's all they want. They just want a consistent cash flow. And it that has a lot to determine what you're trying to accomplish when you're building a wealth strategy. Are you trying to build wealth, or are you trying to maintain wealth? Or are you trying to have increasing cash flow? And one of those things you could do is you can buy more and more dividend stocks. And as the dividend companies raise their dividend, then they're raising your value of money. So that's another strategy. We do talk about dividend stocks on this channel, but I just don't see a whole lot in it for the short term. I mean, if you're trying to build your portfolio from 10 to 100,000, you're not going to be able to do it quickly with dividend stocks. You can do it with a Tesla, with a growth stock, but you're not going to do that with a dividend stock. Dividend is just to make sure that on a regular basis, if you have $1 million and you're getting 2% a year, then you're getting a nice $20,000 a year just on that money sitting with that particular company. It's sort of like what Warren Buffett does. Pretty much he's, has some of his money or shares with Bank of America because they give, actually, they probably give him a little bit more than a 2%. But, just imagine that if you own $1 million of Bank of America shares, you're getting a 2% interest per year. So nice little $20,000 on top of, just for the fact of owning these shares in the company. So that was just a quick tip. There's a couple other YouTube channels that do that. I don't really talk about dividends all the time because, it really depends on how much money you have and how much, if you're trying to build, if you're trying to maintain wealth. I wouldn't say so much build or increase wealth. I would say it's more like a maintain wealth strategy, especially with inflation being up. I would definitely want a dividend that's growing, like Bank of America. So this was just a quick review of my stock portfolios, my Robinhood, and my other account. I want to thank you for watching. Thank you for listening. Please like, share, and leave your comments below.